Hello, everyone. Good morning, good afternoon, good evening, wherever you are in the world. It's great to be here. Welcome to the live panel, Innovating Financial Services and Upskilling for the Last Mile. My name is Patsian Low, and I am the Head of Inclusive Impact and Sustainability for Asia Pacific at Visa. With me today, we have wonderful friends and colleagues in financial inclusion. We have Ms. Kriti Sharma, who is the Head of Partnerships in the International Trade Center Street Trades Program. We also have Mr. Corentin Larue, who is the Managing Director of Fundamental, a spin-off of Fundes, currently based in Mexico. And we also have my colleague Carlos Corominas, who is the Head of Inclusive Impact and Sustainability for Visa, based out of Miami, covering Latin America and Caribbean. So we're really excited to be here today, and we're going to try something a little bit different for our live panel. Instead of each of us giving a long speech, we're going to dive right into a group conversation. So here's how it's going to work. Each of us will get the chance to ask a question to the other panelists, and we'll explore different facets of our topic very naturally through our responses to the questions. And in this way, we hope to make the panel as engaging, as interactive as it can be. We are, of course, looking forward keenly to your participation. So please submit your questions in the chat box. The moderator will incorporate these questions in the roundtable discussion, or they will be answered directly in the chat box itself. In the interest of time, we do ask your understanding if we're not able to address every single question, but we do hope that we are able to provide you with some perspectives to several of your questions in today's session as well. Please don't forget to type your name, organization, and where you are joining from in the chat so that we can be very directly addressing the contextual background behind also where your question is coming from. If you have any technical difficulties, please also indicate in the chat, and the conference organizers are going to be able to assist you. So without any further ado, let's dive right in. Let me start first by asking my colleague Corentin, whom we're very glad to address him as Coco, and Kriti. So Coco and Kriti, I know you're both located right now in very different countries, Coco in Mexico, and I believe Kriti that you're in Geneva at the moment. From each of your perspectives, from Fundamental and also from the International Trade Center, I'd like to ask you to take a stab at defining this very important term in our panel called the last mile. How do you define the last mile, and why is it that thinking about delivery of financial inclusion at this level is so important so that we can see meaningful impact from financial inclusion work among the underserved communities? So maybe we'll start with you, Coco, and then we'll turn to you, Kriti, for your response to that question.
Thanks a lot, Patien. Nice to be here, and hi to everyone who's connected. At Fundamental and Fundes, we work across Latin America. And in Latin America, as many emerging countries, I believe, is marked by the power of its millions of micro and small businesses and its informal entrepreneurs that you could find everywhere across urban, suburban, rural areas that are actually nurturing the communities with selling things, distributing things, producing produce, etc. Well, I would say that for us at Fundamental and Fundes, this is the last mile. They represent micro businesses in Latin America, represent 96% of all the business fabric. They hire 64% of the workforce, and when we have a look at each sector, when they have a very strong presence and relevance in economically. So mom and pop shops, for example, represent more than 50% of the retail sector of the retail sales across the region. You have more than 64% of Latin American GDP that is represented by the fragmented services. And basically those micro and small businesses face a number of challenges, even though they hire and have such a relevance. But they're usually, and we can go deeper into the challenges they face, but they are fragmented, isolated, traditional, very often informal. And this is what we would define as the last mile here in Fundamental. Those micro and small businesses and their consumers.
Thank you very much, Guranta. And firstly, before I begin, I'd like to thank the organizers and our dear partners, Visa, for the invitation. Good morning, good afternoon, good evening to everyone who's connected. I think Pat introduced me very well, but I work for the International Trade Center, where we strongly believe that inclusive trade is the driving force for sustainable development. And for decades, we have championed the cause of women, youth, and other marginalized communities in the global economy. So especially through the She Trades initiative, we work closely with women entrepreneurs, women farmers, and producers in over 73 countries, where we have actually seen firsthand how these women, often in rural and underserved areas, tend to be excluded from mainstream financial services. So for us, the last mile actually means the final stretch in reaching these women who face a series of compounded barriers. We're talking about limited financial literacy. We're talking about lack of digital penetration. In a lot of areas, there is not a formal banking infrastructure. There are no support systems. And unfortunately, in many countries, there are deeply ingrained socio-cultural norms as well. For instance, in many countries that I have worked with, I've realized that women need the permission of male family members to engage with financial institutions, or they just don't have collateral because a lot of these assets are owned under the name of their husband. So these are just some of the barriers that conventional financial models just don't account for. So we realize that the last mile is challenging, but there is a silver lining because this is also where meaningful interventions can have the most impact. And why I say that? Because we have seen research, we have seen real life examples that when women benefit, everyone benefits. When they get access to financial services, when they get access to economic opportunities, they will not keep it with themselves. They will reinvest in their families. They will reinvest in their communities. And this will lead to improved education, improved healthcare, and just overall improved economic resilience of local communities as well. So this is how we define the last mile. And we realize that it requires us to be more holistic, to think of being innovative, and to also identify the right stakeholders who can help us bridge the gap and make sure that the benefits of financial inclusion can really be equitable and far-reaching. And speaking of stakeholders, I'd like to maybe give it back to Pat and Carlos, because you are also representing us from two different regions, joining us from a very reputed private sector organization. How do you think why the role of private sector is important in overcoming this last mile challenge? And what are some specific examples from your two different regions that you'd like to share with us and the audience today?
Thanks, Kriti, and I think it's really quite insightful for me when I hear how you and Coco speak about the last mile in your respective perspectives coming from very important impact frontline organizations. I think from the private sector perspective, I want to just put us in context by citing a very interesting statistic from Asia Pacific. The World Bank had estimated, I think this is about a few years back now, that approximately 70% of the adults in the emerging markets in Asia have access to a banking or a digital account. In many ways, representing that there is already a great progression in terms of access to finance and being able to have the opportunity to utilize financial services. However, only 40% of that had undertaken their first transaction. And what that tells us is that there is a lot of room yet still for the underserved community to be able to transition from not only having access to finance, but actually utilizing it for their own economic benefits. I also remember that recently in reading a report published by Women's World Banking with respect to India, where rural women that were gaining access and building a digital identity for themselves for the first time would have opened up a bank account with this digital identity, but then continued to save up their money in cash in their homes while the account will just lie there quietly unused. And it makes us wonder, why is that the case? So I have a theory, and I think from the perspective of Visa, where we really are looking at how to uplift everyone everywhere by being the best way to pay and be paid, financial inclusion looks to us that as something that needs to happen within an ecosystem of transactions and behaviors. To date, many of the interventions are fragmented, addressing perhaps one need but not the other interdependent challenges that many of the last mile communities are facing. But yet, in reality, especially in the last mile, financial needs and behaviors of communities are, even though they may be small on a per transaction basis in terms of quantum, there are very many of them, and they are very complex. For every last mile community, balancing not only the economic, but also familial, education, social, health, technology, daily needs, all of this coming together in a very unique but very complex portfolio of transactions. So it is really important that there is an ecosystem of support that is making these types of behavior and transactions come together in such a way that access to the digital economy isn't just a financial matter alone. We saw this in our work in India with United Way Mumbai, which is a great partner that helps us economically empower tribal and slum women and self-help groups. Their digital financial behavior goes beyond their micro enterprise. As you say, Kriti, in the work with women entrepreneurs as well, it involves their neighbors, their families, their children, and daily household needs, which gets further reinvestment from their activities. So it is critical then that private sector service providers are involved in this full ecosystem of support. We also see this in Indonesia, where the Financial Services Authority have been rolling out what's called the inclusive financial ecosystem at a village level, to be executed by village authorities in partnership with service providers like microfinance institutions, like fintechs that are active in the village level, so that last mile communities do get this ecosystem of support. I'm sure my colleague Carlos will have his perspective as well from Latin America.
For sure. First of all, thank you for inviting me to this panel. A pleasure to be here. And good morning, good afternoon, good night for everybody who's listening. I would like to expand a little bit the introduction of myself, just to share that I started my professional career working in the largest bank in Mexico. Then I become, because of the destiny, in a small business owner of a micro firm. And then I joined Visa 23 years ago. And I shared this with you because one of the roles that I had in Visa was being the small business lead for the LAC region. And I saw so many entities interested in really serving the last mile, but it was really challenging. I will say that today, the best thing that happens for everybody is that technology really reaches, right? And I would like to share a couple of examples. The first one is acceptance. By then, 10 years ago, the only option for you to accept digital payments was like POS terminals, and the average cost was $750. Today, you can start accepting just with dongles that the average cost, depending on the country, rounds between $10 or $20. Or you can even, if you go to different markets in which contactless is really advanced, we have now tap to phone that really makes this free of charge for the device if you have a smartphone. Another thing that has been great are the smartphones, right? And because two things. The first one, I will say that financial education, when we talk about the last mile, to me, the most important thing that we need to discuss is financial education, because the people that are not digitally in the ecosystem embedded is because they do not know the benefits. They are a little bit afraid. They do not know how. And financial education to me is key. Certainly, the devices of these smartphones is a very nice way of reaching them. As a matter of fact, developed with Fundes, a very nice platform for financial education that just not help micro and small businesses in financial education, but also in business education, how to put and run a business. So, but there are still challenges, right? For example, we went into rural areas and we identified that, yes, certainly, maybe as of today, 90% of the people has a smartphone, but 50% of those, they do not have a data plan or they do not have Wi-Fi access. So they are still kind of limited. We need to continue building on top of that. But certainly technology is helping us to get there. I have seen a lot of, financial institutions. Now we have the payment facilitators, for example, they really go exactly into the nano and micro businesses, because as Coco was mentioning, in LAC, in almost every country, 95% or more are micro and small businesses. So it's super important to really pay attention and focus and serve this specific segment, because they are the backbone of the businesses in the region. So happy to continue sharing, but now I would like to go back to Coco and Kriti, and I would like to hear from you your insights about this specific segment, the nano, the micro, the small businesses, and their ecosystem. How important is to work, as Pat was mentioning, in the whole ecosystem for them to really, get financially included, and how we can help them to be really impactful in this sustainability process. Kriti, you want to go first?
Thank you. Thank you so much, Carlos, and a really enriching discussion today. And really, I really resonated when you spoke about micro, small, and nano entrepreneurs, because especially these enterprises owned by women, we see that they are very deeply rooted in the communities as well. They provide livelihoods, goods, and services to also the last mile communities, the most underserved populations as well. And when we speak about financial inclusion, I feel they also have a very important role to play, because they can also act as agents to bridge the gap between formal financial systems and also the last mile communities as well. Now, from our experience with these NMSEs, if I could call them, so not nano, micro, and small enterprises, we have seen that they have specific needs that differ from large enterprises. Traditional banks often see them as quite high risk because they don't fit neatly into conventional banking models. A lot of them, as Corentin mentioned, they operate informally, so they don't have the collateral or the documentation that further, perpetuates this exclusion as well. As Pat was mentioning, we need to create an ecosystem, and according to me, this has to be enabling, this has to be gender responsive, and we have to make sure that they support the unique challenges that are faced by these NMSEs. And according to me, I think this ecosystem should include 4 things. So the first one, I think, should be access to affordable and financial products, flexible financial products for women, especially because they don't have, constant access to traditional collateral. An example of that is some of the work that we have done in Uganda with Opportunity Bank Uganda and the UPS Foundation. So by de-risking loans, we allowed Opportunity Bank to provide collateral-free loans at lower interest rate to women, nano, micro, and small enterprises. And as a result of this, over 481 women were able to access $1.6 million in financing. Second, I think it's very important to provide advisory services to financial institutions. So we need to work hand in hand with financial institutions to make sure that they are creating gender lens products that are truly catered to the needs of these enterprises, but we also work with these institutions to improve their services to women. For instance, in Zambia, we worked with the Central Bank of Zambia, which is a regulatory institution. It has the power to transform the full landscape. We worked with them to convene a cohort of 40 institutions in the country, and we created a gender lens funding catalog that provided an overview of all the challenges faced by women enterprises, especially NMSEs, and it also provided financing options that are available for these women. In Kenya, we have worked very closely with Absa Bank Kenya. We provided our advisory support, which led to the launch of Absa Bank Kenya's She Business Financing Program, which provides unsecured loan of up to 10 million Kenyan shillings, which is approximately $8,000, with a repayment period of 6 years. Number three, as you mentioned, Carlos, financial education is paramount. We provide targeted financial literacy and mentorship programs, which is very catered to the social cultural barriers that women-led NMSCs face as well. And here we also want to leverage digital tools and platforms because they can not only boost learning, but at the same time enable mobile banking, other microloans, which are also very important to reach these last mile communities. And here I want to take the example of our partnership with Visa that we have in the Gulf and the Asia Pacific region, where we have provided targeted financial literacy and mentorship programs to over 500 women, with a focus on leveraging digital financial solutions. So we have also shared Visa's online resources, their tools and their platforms that businesses can adopt to really grow their businesses and financing. And last but not the least, I think it's very important to address socio-cultural barriers. So we need to work with local NGOs, grassroots organizations to really understand the structural barriers that women face. So if you can see, there's a thread to these four pillars, which is multi-stakeholder partnerships. We really need to bring all the stakeholders together across sectors, so be it financial institutions, private sector, international organizations such as ours, NGOs, technology providers, governments, and local stakeholders. Because when we work with them, we can make sure that we are not only providing, affordable, flexible, and very catered financial products to these women, but at the same time, we can also make sure that we are addressing broader barriers. We are addressing gender lens, challenges, the social cultural norms, and creating more transformative impact on communities as well. And I know Gohantan would like to add a little bit here from his perspective as well.
Yeah, thank you, Kriti. This was super interesting to hear how different stakeholders can, like merging philanthropic and development organizations to traditional financial institutions can lead to innovative products for this segment. Just to complement your answer, I'm just going to make one precision before entering into it, because I forgot to do it in the first question. What we do at Fundes and together with Visa actually is to build innovative solutions, models to serve micro and small businesses. And then fundamental in particular, we do it by creating social enterprises that serve micro and small businesses on a daily basis. And if we look at the panorama and trying to analyze what or summarize what are the challenges that those micro and small businesses face and what are the solutions that can tackle those challenges, I could summarize them in three main blocks. The first, block of challenges that those micro and small businesses are facing are skills. They lack technical skills, soft skills, and business skills. And when it comes to the first, technical skills impede them to or affect the quality of their service they produce. The soft and business skills impedes them to grow as a business, and the soft one is often more challenging than the business one. The second big main challenge is, of course, the financial exclusion and the working capital shortage that limits their production capacity or their purchasing capacity, depending on if they're producers or retail micro businesses or retailers. The third one are usually the market access and their negotiation power. MSMEs, as I was mentioning at the beginning, are very fragmented, isolated, and have little access to market. So, many solutions exist. You can have actually type of or category of solutions for each of those challenges. Micro learning exists to support micro businesses. You have microfinance that exists as well, or fintech solutions for micro businesses. And when it comes to market access, you have different solutions or group of solutions like micro franchise, value chain integration, B2B marketplaces. That all of them leverage a few ingredients that are aggregation, how to bring them together to leverage economy of scale, increase the user value, and de-risk those business models. But what I would add, and I really join Patian in her comment that we need to build an ecosystem of support and behavior. I do not believe that those solutions that I just mentioned alone work well or will reach their full capacity. Credit without knowledge and support may lead to over-indebtedness for micro businesses or wrong practices in how to manage their financial products. Training with no incentives may be challenging. So if you're not linking, training to the access to a credit or to improve transaction conditions, may be not tangible enough for the micro business owner. He will or she will not find the necessary incentives to follow the upskilling and the training sessions. So actually, in our partnership with Visa, I had an example that I've always liked and cherry is we built a platform that is called Enco that is tailored to the micro business needs. And as Carlos was mentioning, it's a financial education platform. We found out interesting results when we linked the completion of several classes and courses to specific financial benefits. So, for example, we partnered with a fintech solution called Senior Pago, that is basically a payment device for micro business owners. And when micro business users would complete more than 10 lessons within the platform, we would reduce, or Senior Pago would reduce the commission on each transaction that they would have using their technical device. So we're really linking financial solution and an upskilling solution. And the same could apply, when you see fintech solutions embedded into marketplaces or into value chains or franchise models. Just to name two examples that I think are pretty relevant. There is a company, a fintech here in Mexico called Tienda Pago, which basically provides working capital loan to mom and pop shops. And basically they insert their benefit within the value chain of those mom and pop shops. Basically, they leverage the data from the large CPG companies like PepsiCo, Coca-Cola, that have a number of data about those mom and pop shops. And using this data, they provide microloans. Just another example of how to embed the financial solution within a transactional relation is Vercor. It's a fintech here in Mexico to help smallholder farmers, and basically they are linking the microcredits that they provide to in-kind repayment in produce, or they are linking it to the purchase of inputs that they can get directly on Vercor marketplace of products. So it's how do you link those different solutions. And I would stop here. I really do not believe that in silo we would tackle, and that this ecosystem of linking those solutions can be more efficient.
Coco, I just want to jump in real quick, Coco, because I'm like furiously nodding as you're speaking, because I feel there's so much resonance in what you've just said, particularly around the importance of linking and connecting all the different interventions in a way that provides an ecosystem of support for the nano and micro business. I want to particularly point out something really interesting that you mentioned, which is the innovative designs now that are emerging around how skills building and digital financial literacy are going to be introduced to the last mile community that will be benefiting from the skills and knowledge, so that it translates immediately and in an aggregated fashion to improvements in their lives. You talked about linking incentives to credit and incentives to learning, but also credit to services. I want to say that the same type of observation happens in the Asia Pacific region as well, where we have seen financial literacy content being adapted into bite-sized pieces that are sitting directly in, for example, e-commerce or marketplace services for the micro seller. We have seen this already implemented by some visa partners in Bangladesh and also in Pakistan. Particularly in onboarding micro sellers that may not previously have been as familiar with a digital platform onto selling online for the first time. We also see that there is an opportunity for the types of skills building to be part and parcel of the financial institution's SME loan process. We've seen our partners, the Fiji Development Bank, for example, work with Visa's financial education material to support smaller micro businesses that are interested to get financing for the first time from the bank, walk through a process to improve their understanding of what is needed to be prepared, so that when they do apply for the loan, they have the right knowledge to present their business background and finances in a way that would give them the best success of getting their financing. So I think this innovative approach of embedding these interventions into each other is really a unique way for private sector as well as government and impact organizations to work in a seamless fashion, so that this ecosystem of support does exist. So I just want to resonate very strongly with that, and thank you so much for bringing up those examples.
Well, thank you, Batian. Actually, with Carlos, we've dreamed about having ENCO being like kind of the filter to get access to credit for financial institutions, and hopefully, well, we can be inspired by the Fijian Development Bank case. We've been talking about potential solutions. When we were preparing this webinar, I was particularly happy to see that that between all of us we were willing to share also what was not working and failures that we've seen in our experience and personal career. So yeah, I'm turning to you, Batian, Carlos, and Kriti. If you could share, from your long experience working in the last mile, what has been like a memorable failure that you've seen, and what have you learned from it?
Thanks, Coco, for that question. Carlos, please go ahead.
Sure, if you want, I can go first, certainly. Well, first of all, I would like to say that to me, what is a failure, and I will say that for everybody, and maybe it's still, I am really hoping, because I have seen a lot of progress, but it's like how we consider or treat the nano and the micro businesses. And I'm going to explain a little bit further. When there's the KYC done to them, they are requested for a lot of documents. They are treated as not just as formal, but as a medium or large company. So it's very difficult for them to get access to credit, because most of them, at least 2/3 in Latin America, are informal. So they do not have like a credit history. They do not have specific papers that are requested. So they are left out since the very beginning. I mean, we haven't been able to adapt to the reality and to start looking for alternative data, and knowing that we are not going to find them in a credit bureau maybe, but maybe we can find them as person plus then other variables, right? That we can start just for looking very simple ones like utility bills, how they pay them and so on, and a little bit of their own business, no? So looking for how much they know, how much they are educated, but because to your point, Coco, you might recall that there was at least one credit lender who used to use our financial educational platform, ENCO, and it was also providing like points for the credit score after they were doing, let's say, 20 lessons. They were like even highlighting which lessons for these small business owners to execute, to perform, in order for them to get almost more, well, at least to increase, very importantly, their opportunities to get an access to a credit, just because then the loaner was like more confident that they knew how they were going to be using it, how to repay it, how was the best way to invest it, that they knew which was their main product or solution that was really bringing revenues to their businesses. And so I will say that, again, all this is super important, and just the failures, like let me start with a very tiny ones, but that are sometimes are important. For example, when we developed Enco, we were super happy, and we were like kind of strange that people didn't start like using it. And we decided to go to the field. We were just asking for 2 fields in order for the people to register: the name and the email. For us, it was super simple. So we went and we were putting people together, like let's say 20. And raise your hand, how many of you have Facebook? 17. And how many of you have like email? And there were just like 3. And we were like, no, there's no way that you have Facebook without an email. And a lot of people told us, oh, you know what? Maybe my son, my daughter, my husband, somebody did the email for me, but I do not know. I do not have an email. So just those tiny barriers that we were facing, like, oh, this is really like, that's the reason a lot of people was trying to use the platform, but they weren't even able to register. So we made it simpler with just the phone number, and that's it. That's the only thing that we request as of today. But in larger things, as I am saying, like the most important is that we need to, as an industry, as an ecosystem, everybody, every single, not just the private sector, NGOs, governments, multilaterals, everybody needs to continue working on defining and elaborating solutions that are really aimed for these nano and micro businesses. That will be my comment. To you, Pat.
Thanks, Carlos. I'd like to ask Kriti to speak next, actually, because I know she's got amazing examples. I can see her burning to share. So, Kriti, please.
Thank you so much, Fad. I think you read my face. And I really like this question because, and I agree with what Carlos said, I think challenges and failures are also very important, right? Because they're also a stepping stone to success. So one of the most memorable challenges, if I can cite, is from our work in East Africa, where we worked with local financial institutions and actually Opportunity Bank with the UPS Foundation, where we created these collateral-free loans for women in the last mile communities, so really in rural and formal sectors. Now, the team was very excited. We rolled out these products, but somehow, the uptake was very, very less than anticipated. And that's when we decided to investigate. We reached out to the women, we reached out to the financial institutions, to other local community leaders. And we realized that many of these women were not even aware of these solutions. And even if they were very hesitant to engage with the banks. There was general mistrust, and they were, of course, compounded by these long-standing social and cultural barriers. So we decided to shift our approach. We first focused on building trust. That's the most important thing for us, building trust and financial literacy. And we did that by working with local women's business associations, with local NGOs, community leaders, where we delivered financial literacy in local languages, really catered to the specific social and cultural barriers faced by these women in the last mile communities. And through these community-based networks, we started sharing information about our financial products, so that they're aware of what we are actually offering. And on top of that, we made sure that all the financial institutions that we partnered with received gender sensitivity trainings. We made sure there was a designated focal point there to ensure that the women who are coming to them can feel the most comfortable. So for us, this combination of building the trust, building the capacity, and at the same time, activating the institutions really helped us reach out to the last mile communities, because we saw that we were able to disperse in the end more than $1.6 million in these collateral-free loans. And one of the major learnings that I derived from this experience is that product design is never enough. Even the most successful and the most brilliant financial products will not succeed without the right delivery mechanism. So we realized that we need to activate the ecosystem. We need to make sure that we work with the local institutions, because in order to achieve this financial inclusion, the product doesn't have to be there. It has to be perceived as valuable and relevant and really cater to what are the needs of these women in the last mile communities. And again, I think another lesson that I continue to hold with me is the importance of continuous feedback mechanisms. When we realized something was not working, we didn't get defensive. We listened to the people who the product was for. We listened to the women, we listened to the financial institutions, and we were agile enough to incorporate those feedbacks and really, tailor the product to meet the needs of women in the last mile community. So I think these are some lessons that I continue to keep with me. The initiative continues to keep into account as we continue to reach the last mile communities, especially women. And I think now I'd like to pass it to Pat to share her most memorable challenge with us.
Thank you, Kriti. I'm always smiling when I hear the sharing from everybody, because it's amazing when I think about it, how many common lessons and challenges we would have faced as well in the work that we do, even though we're working at different points across the globe. Which actually in and of itself gives rise to a lesson about how we can learn very much from each other in the form of a self collaborative learning. But we'll get to that point shortly. I think for me, I probably want to highlight 3 experiences that in Asia Pacific were probably the most instructive for me personally, but I also feel is important for how we think about financial inclusion. The first is the experience that we had in Indonesia, where with the Asia Foundation, we had introduced a women entrepreneur upskilling program, particularly in the post-COVID environment, helping many of these women entrepreneurs in more remote communities, for example, in Lombok Island, really get their families back on their feet through micro-entrepreneurial activities. With many of these women, we introduced the upskilling on a mobile device. So it could be a smartphone or it could be a tablet, but it was very much facilitated by community workers who will go out to literally the last mile and work with these women and their devices, putting the learning material on the devices so that they would be able to continue to have access to this, even if the community worker was not going to be able to make their way out to the village in the future. And, we have a fantastic video that also shows how this is done, and I'm happy to share that in the chat box later on if the audience is interested. But it was such a great experience for the program. We saw anywhere from 75 to 90% adoption of digital financial methods in order to transact with their businesses. And, we could see that there was a definite increase in confidence among the women to use digital financial services. We thought, wonderful, let's adapt that approach to our next program, which was happening in India, where we were working with rural and tribal women, as well as slum women who in self-help groups were also looking to upskill themselves in a digital economy. In that program, however, we saw that our partner, which is United Way Mumbai, particularly in the context of the slums, which I had the privilege to be on site to see how this program was going to be delivered. Very similar interventions in some ways. There were community workers, many of them peer women educators from the local communities that were working with these women in upskilling them in their business skills. However, the mechanism that was utilized was in the form of a book. So the financial literacy and business skilling content was actually published into a little book. It looked like a financial diary. And each of these women would bring this book home. And I was scratching my head a little bit. I was thinking, it's digital financial inclusion and digital financial literacy. Why is it in a book? And the learning that I took from that was actually because many of these women either were sharing devices or borrowing devices. And sometimes the devices may not be in their hands. They were sharing it with their husbands or their sisters or their children. And they don't always own the device that would eventually be the one upon which they would do a financial transaction. And as they are building their literacy skills in finances, in the digital economy, they wanted to be able to keep something that was close to them, that they have ownership and agency over. And the book was the best way in this program for that to happen. And that was a learning point for me, because it taught us that the road to digital financial inclusion need not only be digital alone. We needed to understand that there was a lot of social and access to digital infrastructure context that we had to take into account, so that financial literacy could be effectively brought to the community, and that would allow them to utilize it and absorb it in the best way, so that when there is access to a digital device, however form it may come, the agency and the empowerment that these women would have around their knowledge continues to be there. So that was actually a very good learning point for us coming from this program. And then the last learning point, actually, which then led us to what could potentially be very interesting opportunities in the future, was that this methodology of how that financial literacy is delivered in this context was very uniquely designed for the social and cultural environment that these women were in. That in and of itself is a very specific area of work and an area of investment, not only in terms of the content of what form of what material is useful for financial literacy for these women micro entrepreneurs, but the channels through which they're delivered, the format, the medium, all of that also actually needs a fair amount of investment and adaptation. And that's something that we take away with us, because we have seen in many other types of financial literacy programs where there is sometimes perhaps an overinvestment in content, but maybe not enough attention paid to the channel, the modality, and the medium of delivery, and how that may in fact have to be plugged into other forms of service delivery that would be most front and center in front of the last mile community. So that may require some thinking around, do we develop APIs? Do we develop plugins? Do we think about content in bite-sized formats? Do we not think, do we move away from learning platforms, but think about WhatsApp shareable videos, for example? And so the modality and the medium and the channel for delivery, I believe, also needs a fair amount of investment, just as much as the content itself needs to be. So I'm going to stop here, as I'm seeing a fair amount of questions coming in already. So we do want to give enough time to address them. And I'd like to, before I dive into it, ask my fellow colleagues in this panel to also start looking at the questions as well. Some of them may need may be easily answered with direct answers in the chat box, but I think some may actually require a fair amount of discussion. So I'm going to exercise moderator's privilege and pick on a few of these questions that I think would be quite exciting to address. The first one is going to be a question that was addressed to you, Coco. And if I may, in fact, also extend that question to also Carlos to answer, because I think it would be very relevant for both your region, well, the work that both of you do in your region. Could you share examples of successful innovations that address some of these barriers that we talked about? For example, skills gaps, capital shortage, market access, negotiation power. So maybe if I could ask Coco to bring up a couple of examples where you've seen innovations that have addressed these barriers successfully. And then likewise for you, Carlos, you've been in the industry, you have been yourself been a small business owner, you would have seen also some really interesting examples. So maybe I'll ask both of you to address that question, if you could, please.
Okay, perfect. So we're talking about success cases within those innovations that we were talking about. I just want to make sure I understood well the question.
Yeah. That's a good clarification point. So this is a question from Luciana Alvarez, who is asking about examples of successful innovations that are addressing barriers like skills gaps, capital shortages, market access, negotiation power.
Okay. Well, yeah, I can name a few. We've been working, on providing training and bite-sized training for a while at Fundes and together with Visa, and an innovation that we were facing a challenge where many users would be stuck between 2 and 10 lessons, and they would not go further away. I can name one success case that doubled those numbers when we started to integrate bite-sized peer-to-peer video learning. So basically, it's a shopkeeper talking to another shopkeeper in a very informal language, following some kind of a TikTok approach to learning. So very you get a video that lasts 1.5 minutes. You have one question, and then you go to another video, and the engagement rates have been very high, and that's the case of what's an innovation is called Simon. So that's more into the how to consume, and it goes in hand with the reflections that you were just mentioning, Patian. When it comes, to the linking the embedding the finance within a value chain. I really like, I just mentioned Vercor and Tienda Pago, but these are really great solutions of building a financial service that is tailor-made to one segment of micro and small business. Often we believe that it's you have a one size fits all solutions, and that micro businesses are one creature, one body, I would say, but they are very different, and the needs are different if they are upstream or downstream within the value chain, and if they are producing something or distributing something. And I believe that those two solutions of really embedding a financial credit with in-kind repayment when you are a producer, or that's the case of Vercor, or really relating the working capital credit to the data that comes from their anchor client, in the case of micro and small businesses, of mom and pop shop, is very powerful. Those two companies are growing and have a significant impact on their users. So I would name those two. Just one other, I think, case that is interesting. We're seeing the rise of artificial intelligence, and it's a buzzword that is used in many cases, but I think it does really apply to what we're talking about here. Two examples. In the case of Simon, we're trying to generate those peer-to-peer learning with avatar based video content. So in order to make video much faster and easier. And in the case of the delivery of microcredits, there is a case very interesting in Mexico, which is called Aviva. And basically it's a fintech that is providing credit to micro and small businesses, but they're doing it in a phygital way, like with physical points. And so basically they have kiosks in urban areas of Mexico City where low-income consumers can go, and they are in front of a video box, of a phone booth, where they have an interaction with with the artificial intelligence that will assess their creditworthiness in minutes. But it's really what's very interesting is that it's mixing the tech approach and the physical component of those consumers that are still very physical in their behaviors, I would say. So yeah, that's to name a few examples. I hope it was structured enough.
And let me
Thanks
just
very
add
much,
one
Coco.
very quickly, and also answering another of the questions. It's because we have this solution with WOCU, that is the World Council of Credit Unions, and USAID. And one of the questions that I read, it was the importance of partnerships, working with somebody else. And for us, it's key. We work in almost all of our programs with governments, with multilaterals, with fintechs, with NGOs, and so. And obviously, with that, we can reach a larger number of beneficiaries. And in this specific case, that program runs in Ecuador and Peru, and is aimed to help women entrepreneurs that are from those countries, also from Venezuela, that are migrants to those countries, and has been a really important success, seeing all these women, how they are increasing their revenues in their businesses, thanks to the program that is run by WOCU and USAID, supported with our financial educational platforms.
Wonderful, wonderful. Thank you so much, Carlos, as well, for that wonderful example about the WOCU, the World Council of Credit Union. I'd like to also invite both Carlos and Coco to please share some links in the chat box of the examples you just talked about, because they're so exciting and so interesting. I'm sure our audience would love to hear more about them and learn more about them too. I do want to pick up one more question, because I think the questions are really rich in the chat box, in the interest of time, so that we can quickly address that before we go on to close out. I would like to ask Kriti to maybe take a look at this really interesting question, which is very, very real one. Given the rapid advancement in technology, how can digital innovation be leveraged to enhance financial services for last mile beneficiaries? Are there any particular technologies or trends that you see as game changers? Now, I know this could take us anywhere from AR to something else, so I'm going to ask you, Kriti, to please feel free to perhaps share one example in the interest of time.
Thank you so much, Pat. And so, such a beautiful question. And you're right. We can go all out. But I think number one, mobile banking, especially, is something that I feel has a lot of potential, and it could be a game changer for the last mile community, especially for women. For instance, I'm from India. We have this tool called PTM. In Kenya, we have M-Pesa, which allows people, especially in last mile community, to just conduct transactions without even needing a formal bank account. And going forward, I also see AI. We are living in the world of ChatGPT. We may be potentially looking at a future where we can assess the creditworthiness of individuals through non-traditional data. So I'm just thinking and brainstorming of a few innovations and tools that could really change the game for financial inclusion for last mile communities. And in the interest of time, I'll just pass it over to you, Pat. Thank you.
Thank you. Thank you. I just want to say quickly that from my perspective, the most interesting digital innovation example, well, from a technical perspective, may not be so cutting edge as some of the things that are out there. But in terms of impact, I think it's really been quite amazing, which is the introduction of digitalization into the cattle marketplace in Bangladesh. For those who are familiar, particularly in Islamic markets, once a year, there will be a very big cattle marketplace that would allow sellers and buyers to trade so that they'll be able to buy heads of cattle that would be part of the annual Eid festivals, typically known as Korban. And the transactions and that marketplace, while only for a short period of time, historically has been very lucrative, but mostly in cash. And yet over COVID, what had happened in Bangladesh was that it was difficult to see this very important livelihood avenue for many of the cattle farmers actually come to life. So the government, as well as the Dairy Farmers Association and the related cattle farmers, all came together to digitalize the cattle market. Where you could actually see pictures of photos and videos of the cows that are going to be sold, and the farmer who is selling that cow, and also digital mechanisms for the buyer of the cow to be making payments. And this post-COVID, now back into a physical marketplace, was able to translate into digital forms of transaction for the buyer, for the farmers that are selling these cattle, allowing them to also now have lesser risk of theft, much more security and leakage in terms of the transactions that would be happening during this very short period of time, but it is so important to the Bangladesh community. So I felt that application of digitalization to that opportunity was really innovative, and it's a great example of how we can see this showing up in the last mile. So making that the last answer for the questions that are out there. Thank you again, audience, for your questions. I think they've been really rich. I apologize on behalf of the panel that we can't address all of them, but we hope that what answers we've been able to share with you have been helpful and fruitful, and you will see links also from the panelists as we come up with these examples. I want to now, again, bucking the traditional model, turn the closing question actually to my colleague Kriti. Please go ahead and raise the last question to all of us, and we can round out our panel from here.
Thank you, Pat. And I think it's been a wonderful discussion. We spoke about learning solutions, even challenges, but I want to leave our audience with perhaps some vision for the future. So I would like to ask Carlos, Corentin, and Pat, if you would like to share what is your vision for the future of financial inclusion at the last mile, and what do you think are some necessary steps that we should take to really advance on this agenda?
Thank you, Kriti. Well, I will say that, first of all, I insist that to solve or to really help these people on the last mile, we need to work together. So it's a work of everybody, governments, private sector, NGOs, multilaterals, everybody, in order for us to get there. And the only thing that I would like to start seeing is a really important change in the KYC. And in order for them to address it in a better or an easier way that really provides more opportunities for them. To you, Coco?
Sure. Before closing, I just wanted also to thank Carlos and Patian for the invitation. We've been working with Visa for many years, and I'm happy to share this panel today. It's been very interesting. And also, shout out to Patian, who's connected at 3 a.m. in the morning, 3 in the morning. That shows a deep commitment to financial inclusion. But yeah, just to go back to the question, I mentioned throughout the session, I believe that in the future, financial solutions for the last mile should be verticalized, should be very much focused on specific value chains and specific segment of those value chains. So financial products for mom and pop shops, financial products for small producers, financial products for beauty salons, for recyclers, and so on and so forth. I also believe that they should be that the financial fintech solutions can be embedded within those broader transaction solutions, because it's very powerful in a B2B marketplace, in a franchise, and also because you have those other models can leverage a number of other data points to make and mechanisms to make both the credit evaluation easier and the repayment easier. And I would also close that, of course, trends that we are seeing with artificial intelligence and micro learning, and will be key in making it easier for the last mile to get access to financial products.
Thank you so much, Coco. And I will take the last word here, if that's okay with everybody, as we are now reached almost the end of the panel, to say that as we've gone through the last 1 hour, which has just flown, there are very clear themes that are emerging for all of us. The first clear theme that is emerging is that we know that digitalization is so critical for the last mile community, but there are so many other important ecosystem enabling factors that need to be there so that financial inclusion can truly be achieved. We talked about access to finance. We talked about building skills and capabilities and financial literacy. We talked about the social and cultural context and ensuring that we are taking that into account in our interventions, all of which is to say that the way that we see each of these pieces working together must depend on multiple sectors and actors in public, people and private sectors working together for this common outcome. And I will say one more personal perspective on my part, which is that I feel there's so much in common in terms of the challenges and the ambitions that we see across Mexico, and the rest of Latin America, in the work that Kriti, you're doing in Africa as well, and in the work that my colleagues and myself are working on in Asia Pacific, that I really want to see in terms of my vision, Kriti, to answer your question, that there is greater opportunity for us to have South-South learning and collaboration, so that what is one day a potential solution for a soy farmer in Latin America can also potentially be adapted for the craft maker in Indonesia, that can also be adapted to the shop owner that's sitting in the middle of a small town in India. And with that hope and invitation for South-South learning and collaboration to all of us, I want to thank all of the audience and our amazing panelists for your time and effort to really breeze through this very important topic in 1 hour. Thank you all for your attention and participation, and we really look forward to continuing to drive financial inclusion with all of you. Have a very good morning, afternoon, and evening, and we hope to see you for the rest of the Financial Inclusion Week. Goodbye.
Thank you, everybody.
Thank you.